and they have a number of container vessels, so he would be eminently qualified to contribute to this next section about containers, an area of shipping that I have to admit I know little about, so I will mainly defer to the panelists to provide the impetus for the discussion. However, we had already a very interesting presentation this morning on the container side, and perhaps we can gain from the experience and start the session. I think in all of the discussions about shipping, we started a little bit to talk about supply-demand. On the container side, as far as I can understand it, it's a little bit more complicated because it's not just how many ships and how many containers you can carry at any point in time, but it's also the variance of speed and various other factors, such as laying up vessels, in as much as perhaps the container sector is not as pure commodity as the dry and the wet market. So who would like to make some comments on the containers supply demand and the prospects for 2011? Thomas, since we haven't heard from you, we might as well.
Well, I'm completely uncolored. I wasn't here for the previous discussion, so you'll get my honest uncolored opinion.
Is there any other?
It depends on the audience.
Oh, I see. It's if it's Friday, it's I see. Okay, go on.
The fact that we have an order book which is around 25-26% of the existing fleet to begin with is a very favorable position to be in shipping today. And one of the key reasons we are having a only 25%, 26% order book at the moment is probably because we were the hardest hit 2 years ago. We went through an unprecedented crash never seen before in container shipping. We saw first ever contraction of cargo. We saw container ships, container orders being converted to dry bulk orders, believe it or not. We saw a number of cancellation or postponements of new buildings up to 3-4 years, which in my view is the same as a cancellation or complete reordering. So the order book we are faced with at this moment in time is extremely manageable, especially if you dive in and take a closer look at the composition of mainly super large container carriers taking up by far majority. I think it's about 75% or thereabouts, above 8,000 TEU, builds a great story for the feeder vessels, which in fact there's very little ordering taking place. And with obviously a hub and spoke strategy being applied for most carriers on the main haul services, there will be a demand for a very substantial feeder network. So on that side, on the supply side, it's a comfortable situation with a few potential very good positive surprises in the next 24 months of undersupply in certain sectors. The big question is how on earth is the Far East Europe going to absorb all these very large ships? So moving into the demand side, I have no doubt that all the large ships will be absorbed. The big question is how many of the smaller ships will be kicked out. If you do not have a large ship in the Far East Europe, and I talk 8,000 or above, you probably won't have any ships for this service to be competitive in 18-24 months from now. You might as well re-strategize completely and focus somewhere else. It could become a fairly big bloodbath for anyone not having the ability to reach economy of scale. So a huge cascading of capacity is due to take place in the next 18 months, the biggest ever. And cascading means inefficiencies across the board, and that will absorb a few percentage of the global fleet in rescheduling services and idling ships here and there, and all of which, if we assume there's no economic shocks taking place between now and then as a result of what's going on in the Middle East and Korea and wherever we look, basically, then the US consumer and the European consumer should be strong enough to continue to consume enough products to absorb that order book of 25%. So all in all, I'm obviously quite bullish on the market. Final point I want to make in that respect is, typically in this environment, we would be subject to, and I'll raise the hand, but I belong to one of the groups or one of the culprits of the past who would go out and order ships left, right, and center. And the liner companies would be stuck behind, completely out of control in this respect, just seeing the order book building up very fast, in many cases far more than the liner industry wants or needs. And but due to easy money and the KG funds, this ordering would have taken place in a big way by now. We have not seen it because the KG market for capital-intensive ships anyway is dead. Many of the typical tonnage providers are paralyzed. The liner companies themselves, many of them, are not able or not prepared to go out and place huge orders. So the latest orders we've seen is really only by Maersk, Evergreen, and a few others. So we are not about to see overcrowded or a tsunami of new tonnage being ordered, in my opinion, in the next 12 months, luckily.
Well, we have just seen the Maersk order that you perhaps alluding to of 18,000 TEU ships. Is that the trend? I mean, we were talking about 6, 8, 12, 13, 18. Do I hear 20?
I think at this point, the Malacca max is 18,000 TEUs, and there are just a limited number of terminals or ports around the world that can actually handle these ships. And fortunately for Maersk, more than most, they actually have the ability. They've got a sort of a string of pearls concept mapped out, and at the terminals that they operate, they can actually handle these. So other than Maersk, other carriers would be hard-pressed to deploy those size ships.
I'd like to comment on 18,000. I think it's really a milestone and a huge development in container shipping, not because it's a few thousand TEU bigger than the previous one, but it's the first time we see a liner company, and luckily, and it should be the largest carrier probably, who goes out and designs a ship that will never do high speed. It's designed as a shoebox, like we're used to in dry bulk and in tankers. Twin engines, they only plan to use one of them at the time, doing 15, 16 knots. So they're taking the lead in what we can expect in terms of the future. Environmentally wise, these ships, I'm not here to do any advertising for Maersk, but it is, as a tonnage provider, it's great to see this development taking place. They are supposed to be producing half the amount of emissions compared to a traditional ship. And that's where we need to be heading. And again, I agree with your point. Only Maersk at this moment in time, one, has got the financial ability to venture out on a potentially $6, $7, $8 billion new building project if they declare the options without basically, I don't know to which extent they've been to the banks asking for debt yet, but they got the financial. This is the time for Maersk ahead of their number 2, number 3 to go out and make this move, and I think it will be a big new chapter in container shipping.
Yeah, in terms of demand, I think container shipping has always been quite robust in the last 20 years, been growing at 10%, which is the highest among all shipping sectors. I mean, dry bulk grows around 6, tankers around 2. So 2009 was the first year ever in the last 30 years when the container growth stopped. And as Thomas said, a lot of ordering stopped in 2008 and 9. And suddenly we had a V-shaped recovery in the global economy. So there was a pickup in asset prices and rates in early 2010, which was surprising for everybody. But now we definitely see a trend for the liner companies to come back and order more. Key reason also being that they have very, very healthy balance sheets, almost all of the big liner companies. So they need to use that cash in their own business.
Healthy balance sheets, but not great returns on capital, I guess.
Yes,
market share versus profitability.
I hope more within the industry actually focus on profitability as opposed to market share. I mean, many carriers know that whether it was in 2001 or 2009, most of us had full ships, but we just weren't making enough to cover our operating costs, right? Which led to this horrible set of numbers. So hopefully we keep that at the back of our minds and make sure that we have more focus on profitability. I think that's the key for our industry. Otherwise, we'll continue to wallow in the 1-2% return. And if those who are continuing to finance our business, if you all are happy with those returns, go ahead, continue to finance. But I think you'll be hard pressed to allocate more funds to an industry which doesn't always necessarily generate the best returns. But anyway, that's only our view.
I guess being dominated by a few, relatively few major players, the container market has, in a sense, benefited in as much as there was a lot of self-regulation, particularly after 2008, when a lot of vessels were laid up and there was some order restored, and then the benefits were, in conjunction with market demand increasing, were reaped in 2010.
I'm not sure I got the question.
It wasn't a question, it was a statement. What about, I mean, one of the traditional areas of supply of vessels, as Thomas mentioned, it was the KG markets, which are now pretty much, well, extinct, suffering, you take your pick. How do you see that influencing the container supply?
I think I touched upon this slightly before. It's currently holding back a huge ordering party taking place.
Which is good.
Which is brilliant. There's a lot of people sitting around, companies extremely itchy to go out and order tonnage, and it's not happening, not yet anyway. It gives an opportunity for those who can, the few who can, and they can be a little bit more picky in who they choose, and they will be more picky in who they choose. They also need more equity. The lending banks are not going to provide neither 100% pre-delivery financing or 85% post-delivery financing. You need a lot more equity to provide, and both the equity and the debt is not priced at a level where it used to be. So the entry barriers have just raised a few notches, and we probably have seen already some level of consolidation in the tonnage providers, among the tonnage providers, and I think that's not necessarily a bad thing. The demands being placed by the liner industry or the liner companies are not only on pricing any longer. It is also, and quality of ship management. It's really on the whole organization in the owner's approach to sustainability, energy efficiency, and so forth. So, and this is basically a demands being passed on from the shippers, from the Walmarts and the IKEAs, through the liner companies to the tonnage providers. So unless you have an organization and an ability to deliver both on your cost of capital structure, to provide a competitive pricing on charter rates, and you have a ship management that can stand and is ready to be audited by your customers, which we have seen in the tanker business. I expect to see that in the container business soon as well. And unless you have an open approach and work closely with the liner industry to bring these ships right down and assisting in bringing the emission per bottle of water carried to an acceptable level, you won't be a long-term tonnage provider to the liner industry. So we see a very rapid development in that sense. So for new entries to come in, it ain't going to be easy, I think.